Senator Van Hollen of Maryland is recognized.
Thank you, Mr. Chairman. Thank all of you for being here. I want to pick up a little bit on some of Senator Warner's question with respect to CDFIs and MDIs. And as all of you know, the Congress, on a bipartisan basis, made a major commitment to these institutions back in December 2000 as part of the omnibus there. In fact, yesterday, the Treasury Department just announced $86 million coming to Maryland institutions, CDFIs and MDIs. And I want to focus on some of the banks represented here who have the biggest footprint in the state of Maryland. And I am familiar from our conversations, Mr. Moynihan, Mr. Rogers, and Mr. Scharf, with what your banks are doing with respect to CDFIs and MDIs. I would just like to ask each of you for your continued commitment to these efforts in the state of Maryland and beyond, but in the state of Maryland, because I do think they play a vital role in economic empowerment. If I could just ask each of you to commit to continue to work with us in Maryland.
Absolutely, Senator.
You have our commitment, Senator.
Senator, thank you for your leadership on this, and we absolutely commit to continue to support.
Thank you. And I know cities also made some investments in CDFIs in Prince George's County, and others have too. Mr. Demchak, on PNC, we haven't had a chance to talk about this. Could you talk a little bit briefly about what you're doing in Maryland with respect to CDFIs and
in Maryland and across the country in markets, we've been contributing capital, expertise, opening up ATM networks to MDIs, technology expertise, and we've been sending perhaps the most important thing as part of our community benefits plan is we've been sending dedicated mortgage officers into the CDFIs to help support low-income housing.
Thank you. No, I understand the broad efforts. I was looking at some of the banks that have a bigger footprint in Maryland than some of the others. So
we do as well, and we're there, and we put money into the CDFIs, and we support them.
If you could just give me some information, not now, on what you're doing in Maryland. Okay.
Will do.
Thank you. Let me get to the issue of overdraft fees, and this seems to be an area where I know Citi announced in June that they're going to end their overdraft fees. Am I right about that?
Yes, we have eliminated our overdraft fees and NSFs.
But you still do provide customers with some flexibility with respect to their payments?
Yes, we do. We provide a number of the ability to overdraft, and we give them plenty of warning if they're going to be doing so, and the tools to manage their financial health and well-being.
Got it. So I'd just like to ask, I've been trying to review the policies with respect to overdrafts. I know everybody's been trying to make efforts here. I did notice that Wells Fargo generated $1.4 billion in overdraft revenue in 2021. J.P. Morgan Chase, $1.2 billion. If I could just ask each of you whether you have plans to try to phase out revenue from overdraft fees, or whether this is an important part of your business model as you see it. Mr. Diamond.
You know, those fees are coming down dramatically because the changes are already implemented, like you got to go -50 before it gets charged. You have 24-hour recovery and grace period, advanced deposits and paychecks, et cetera. We think it's a service that clients want. So many people opt in. 70% of the time, they don't pay a fee at all. We do an overdraft. We just simply don't charge a fee because within that parameters I was telling you about. And I also reminding people that if you don't overdraft, they can pay an awful lot on the other side, including municipal bills, tax bills.
No,
okay. And so it's not that simple.
I'm fully aware of that, Mr. Diamond. I did notice, and we can get into some differences later, that Citi, and just happens to be the case in this instance, was able to provide that kind of flexibility, apparently, while eliminating revenue going forward from overdrafts. And look, I think everybody knows that we're talking about lower income people, paycheck to paycheck. We're talking about billions of dollars in losses. I mean, this is an example of why it's expensive to be poor in the United States. Mr. Scharf, can you comment briefly on what you're thinking with respect to the future on overdraft payments?
Yes, Senator. So one of the things we should point out is we've made a series of changes, the last of which was just implemented recently. So we would also expect to see our overdraft fees decline. We have an account that has no overdraft fees in it. And so we give our customers the choice, and we're doing everything we can to make sure that those that do overdraft and pay the fees in these other accounts understand that there are other options for them. And we're going to continue to look at the fee structures that we have and ensure that we're competitive out in the marketplace.
I appreciate it. Look, I think part of the answer here is the FedNow's real-time payment and system, which I've been a strong proponent, pushing them to really accelerate the deployment. I've also introduced today with colleagues from the House and the Senate the Payment Modernization Act, which would essentially require institutions to make deposits available as soon as they're deposited, because people living a paycheck to paycheck, nobody should be making money off of them, in my view, so long as they have the ongoing revenue. It's just that their check is deposited one day, they can't access it. That makes no sense. As you know, many other countries have already gone to a real-time payment system. So we're going to be pushing that. Thank you, Mr. Chairman.
Thanks, sir.